The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Wednesday, the 9th of April, and we're looking at the Dow up 72. It was down very sharply overnight. You can see here, let me show you the futures, YM. There we go. Look at the futures. Ooh, almost went to Monday's low. Had a low this morning of 36,882. The low on Monday was 36,768. So this is a work in progress, and what we're looking at here, let me go through this in the cash. There we are. So the cash, we're in a sell mode in the daily chart. The rally that I thought was a potential based on the volatility, I'll just make this a narrative because I want you to do a lot of things. I was asked if I could really go through a chunk of stocks today, and I said I will do that. So here we go. Where am I typing that? VIX index is right here, VIX.X. There. So the VIX index is trading down $1.57 at 50.76. It did not take out Monday's high of 60.17, but this is really the issue. The issue is it's Wednesday. We've just started 40 minutes or so of the day, so we can't really talk about it. We've got really 3 full days to go to Friday. If on Friday, the volatility index closes like it did on this past Friday, right there with a big green candle in the weekly chart, and it stays as a green candle going into Friday, what we're looking at is that the insurance of buying the volatility index, which goes up when the market goes down when the market goes up, is still rife. It's still there. It's excellent. People are still big institutions are buying it. That's why you've got the price holding so well. So more importantly, what we're looking at is that if there is a tariff war, it has to go on unless it's resolved. And at this particular rate, with China just coming on to say that they're going to push, I think it's 82% or something like that. Then most important in this whole aspect of the tariff, and you have to relate it to the 1930s, and that came about after the market tanked September the 3rd, 1929. So that chart pattern of the Dow at that particular time is a different one, and the type of collapse that we saw was a financial one whereby cash just disappeared because people got too enthusiastic and put money in. This is a very different socioeconomic situation to what I've been looking at. And it's like I could throw away all these dozens and dozens of books that I've read over the last 40 years or so on the 1929 crash, because this is something completely different. So what I want to emphasize here is that this whole tariff thing cannot be resolved in an instant. It's just going to take time. And if you're dealing with China, China is intransigent. It's just, there's no way that they're going to give in quickly. At least this is the way I see it. They have long-term plans, very long-term plans, sometimes decades. So I just don't see in a few days of tariffs that they're going to be worried. But they are worried. You know that they're worried because look at the FXI. The FXI is the Here we go. FXI is the large cap, iShares China large cap ETF, trading at their 38.73 level. And I say, 2 highs at the same price on the 19th of March and a gap down at a peak E. I put it together with Baba. You remember Baba, Alibaba we're looking at, gave that peak G. I put it together with the XPEV, which is the most popular electric automobile company in China, Xpeng, designs, develops, manufactures smart EVs, made that peak F top right there, 2716. Oh, wait, isn't that interesting? 2716 FXI was Come on. FXI was, hey, why aren't you coming up there? Okay, just refreshed, was 38.73. So the same type of top in the middle of March and pull back very sharply. So, I mean, just XPV, look, here it is. It is trading from 27.16 down to the 16s yesterday. Today it's at 17.20. That is a huge decline. Okay, so this is very serious. I mean, I can go EWU. This is United Kingdom ETF. It is the trading that double top peak C1, C2 down up in the middle of March in the 38s, trading right now 33. So this is very serious, and it's broken the uptrend line. This is the UK. I can go through them all. I don't want to go through them all. What I am going to say right now is that, going back to the VIX index, that the volatility index holding here, what I mean by here is in the mid 40s, it's at 49 right now, is telling you that the usual spike that we see like here with that candle on a weekly basis and then plunging to the bottom is different. And it's different in the sense that even if you go to the coronavirus 5 years ago, March of 5 years ago at 85.47, that ran up for 2 solid weeks and then it came down. That was the high at 85.47 all the way through COVID. So I have to take this seriously in the sense that I don't think that you've got two very serious contenders here for the tariff war, and China is not Botswana. China is not almost any of the other countries. That is one of our biggest trades that we need to be dealing with. I mean, go to any store and you'll see made in China, right? Made in China. Although I must say, my friend, economist who I play tennis with, has been telling you his major is that's his tariffs, as he's saying. He's been saying for ages that the percentage that we get here in the United States exported from China based on the Chinese economy itself is actually quite small. It's hard to believe, but it is. And I keep asking him about it. I'll ask him again when I see him next time. Just to explain it. It sounds to me that everything we see is, has a China connection. So this is something I have to now take much more seriously in the sense that I was looking for a major top in the market. I'm talking about a multi-year top based on the usual metrics. That is, there's a favorite sector or sectors. The people just go nuts. You get everyone everywhere starting to trade it, whether it doesn't matter what it is, but it becomes the thing and it just lifts up most of the market. And at some point it just gets so overbought that you get money that was thrown in. When it comes down, it just drains people of finances immediately. That's how many crashes. This is something different. This is something that has to be thought of differently. So I've gone through this little preamble, and now I'm going to go through the different indices as soon as we return, and then I've got a whole bunch of stocks that people want to say, where are levels to watch for support? I'll be right back. Basil Chapman. Now the Dow is down 36 and the S&P is up 7. Be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
All right, I'm just writing down all the questions that I have. Let's go through them one at a time. So I think the VIX at these elevated levels tells us a lot. Have a hard time believing this tariff situation is worse than 2008 in VIX fear level. Unless zero negotiations happen, we have to be close to a solid low. Kevin, okay. So let me just show you a couple of things here. First of all, as I read it, since this is, I'm not sure we can talk about this as a man-made market cascade, but actually it is, only in the sense of the degree to which we've turned down. You know, we were looking at this. I mean, how long have I been saying since November, December that the high techs and the tech sector in general is just so overbought that it just has to go down. And the big question will be, will it go down and drag everything else? And I said that initially that's usually what happens, but then you find support in other areas. Well, if you look at the other areas, if you look at the XLP, which is really the sector that money flows to, that is the S&P Select Consumer Staples. The staples, remember, they were doing so nicely just the other day. Wednesday, a week ago, they were at Coca-Cola, McDonald's. Look where they've gone. They've gone, boom. They've got a one-to-one to the downside from the 84.75 high that was made on the 10th of March. This is the S&P Staples Spider Fund with a round number open. And I'll talk about round numbers. Yes, Flash, I am seeing many round numbers at these lows, either on the day or the day before or the day after. Not enough, but there are quite a few. And I'll talk about that in a moment. So I'm trying to deal with the questions that have come in. Now, I need to, at the same time, I need to say, you know, when you've got something like Stan Hawley, when he was interviewed by Larry Pesavento, a year, what is it? I think it's about a year ago, maybe a little less than a year ago. He said, as I look at it, November, December is where we make a top, and that is the top, and it's all over. Now, the beautiful thing about cycles is that if you got your straight line, your vertical line that says, that's the day, then after that, it doesn't matter whether it's good news or bad news. If this is on the way up, every bit of news is considered good news. That's just the way that the tide, when it's rising, works. When it's on the way down, when you're looking at a cycle top, it doesn't matter what's said. It doesn't matter what gives. The cycle top says cycle top, and then every bit of news says going down until the next identifiable cycle low. So he said, I don't have anything for a long time. I have to respect that as one of the great calls that I've heard, and I believe me, I go back a long way. I go back to Elides. In fact, I just threw it away recently. I still kept his in Barron's. There was an article just before the crash of '87. So so I'm looking at things. I'm not a novice at this. Let's put it that way. So when I see a cycle, then I have to look at it and say, gee, this is a cycle that's a top, and I haven't got those classic, all those dozens and dozens of books. I went through microfiche at the Boston Library back in the 80s. On a daily basis, I went there going through the microfiche of I think it was the New York Times and the Wall Street Journal. Was it the Wall Street Journal? I think it was the New York Times. And there was a reporter in the New York Times who actually identified the 1929 crash. He didn't call it a crash, but he said everyone was bullish, and he was saying, no, be careful, and he gave very good reasons. It was just a little snippet, like a paragraph they would have every single day, but most people didn't. Babson called the top, as he said. I called the top perfectly, except I was 18 months early for the first one, and then the second one, and then the third time I got it right. He was like the day after the top. He said, this is going to be a major top. So I'm looking at cycles, and the cycle right now says, okay, if this is man-made, in other words, the whole thing with tariffs, when you had a signal that was going from the daily sell signal to sell mode, the weekly, let's go back to the Dow, weekly sell signal to sell mode, and now you've got the monthly, which says, I don't know how you can avoid, even though the 9 is still way above the 14, you either got a lot of time with low lows and lower highs, or we're going to get a massive oversold market rally to the upside. But I have to wait for the month to finish before I can put a down arrow to say at least a sell signal in the monthly. I haven't got that yet. So I wanted to talk about that just in relation to the VIX index, and that the VIX index, as I'm looking at it, and what IAII is that I even spoke at the meetings, investors, American AII, I don't remember what it's called, Investors Institute, and these are the lay people. These are people that are putting their money to work. Very bullish. We saw, we've had many people on when Larry's interviewed them, showing all the stats that were showing an extremely overbought condition. And that's being worked off. So I just want to put that as the backdrop to say, now we have to look at the technicals in a slightly different way. Now we have to look at rebounds that need to continue to the upside. All right, done with that. So the next question was the GDX. Is it too late to get into the GDX? The GDX is trading at 43.84. Actually, in this case, it would be to add to it. If you're a subscriber to my opening call, we've been long for the physical gold. So this is, would you basically add to the gold position? And if you look at gold now, which is up 111. So this is what I'm saying, that countries now are putting even more money to work. Maybe it's China. Maybe they're getting out of the bonds. Bonds are down again. Whew, down $1.43 in the TLT. That is a real problem, because just the other day we're moving in counterpoint to the market going down. So I would say, I wouldn't get a full position. I would definitely tiptoe right into the GDX at this particular point. I would also have a stop if you think of it as a trading position. If you think it as a longer-term position, there's a moment where gold is going to be continue to be in play if this market continues very weak. So it's almost like an insurance policy. We've kind of kept it like that as an insurance policy. So I'm going to say, I would start a position here at 43.70, realizing that it was down at 40. So 43.70 is already, quite a big percentage off the low. But yes, I would start it, and I would just give it a little time, because I need to see this pink 9-period moving average on the GDX, the market vectors, gold miners ETF, cross positive. If it crosses positive, it'll probably do that if it can get to 45.75, about a point higher. No, it'll probably take a little bit more. Probably it has to go to 44. If it gets to 44, it has to be this week. You need time. If it gets to 44, I'm saying to you, then there's a really good chance that this downtrend line, which takes you to about 45.60, will be the resistance. 46.94 was the high. The weekly chart is still extremely strong, and so is the monthly. So yes, I'm going to say I would do it, but you've got to realize that it had a tremendous move from 46.94 down to 40. That's it's about a 14 or so percentage decline, and now it's just trying to regain that. So you can't treat this as if, oh, it's automatically going to go higher. It's a work in progress. If you look at silver, you'll see the silver also had a big move up today, but it's got a long way to go. Gold is way more important right now as a geopolitical economic metric than anything else. So that was the answer. Then I've got a couple of others. I'll get to it in a moment. Break coming up. Dow is unchanged. S&P is up 18. A nice little divergence there. I'll be back. Basil Chapman, Tiger Conditions Hour.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So Apple had a low of 161.38 on the 7th. That's 3 days ago. 161.38. Let me just type that in here. But the day before, it had a round number, 61.78. I think that's what I said. Okay. It had a round number, 166 low the previous day. So Fletch is making the comment that there are a lot of round numbers. Yeah, between the round numbers that I was looking at and the volatility index screaming up, those were all the conditions that I would look for at least a pretty decent bounce, even if it's a bounce like the Dow had from the 13th of March, just a week and a half, and then it turned around. It made that top and turned around and came right back down, made the dreaded H pattern. That's really what I've been looking for, and it hasn't really happened yet. So Amazon right now, the question is, could I have a look at Amazon? Is there a trade in Amazon? Well, first of all, when it comes to the tariffs, Amazon has pricing as I'm not there. I don't know anyone in Amazon. So all I can say is from my visuals and from my understanding of what I do, every once in a while I'll click to buy something for $7 or $40 or something like that, and it arrives the next day. It's amazing. I think they have pricing power, but that would go against the profits. So Amazon makes a high of 242.52 on the 4th of March, so it's 2 months. And now what we're looking at is down to 161 level just 3 days ago, trading right now at 174.50. As a trade, I think a number of these major stocks are looking like you could trade them. That's what I wanted to do yesterday, and it didn't work out. And now I'm just stepping. We've got this huge cash position, plus our core stocks, which we bought much lower down. So those prices there, small positions there. I feel I would like the next big rally, hopefully trade it as a rally, but I would look at it as a chance to look at the short side in terms of having the arch formation and then coming back and doing a retest. That's kind of my thinking right now, even if it's extremely volatile. Now, we used up a lot of ammunition yesterday by moving out 1,500 points in the Dow from the lows that were made intraday, overnight. So that takes a little time to regenerate the upside. So as it stands right now, the question about Amazon, I would say, if you want it as a trade at 174.84 and you are watching the market, you could take a bite right now. 174. I should have had that for Apple. Take a bite. We've got 174.83, up 4.16. But I would have the tightest leash. Why? Because this 158 level of the 200-period moving average is kind of my target. I don't have a price time yet. I did it visually, and it came out to a week or in about a week or two. Could be sooner, but that's kind of what I'm looking at here. 158 is a target, and it could make it might not even get to yesterday's high in the 185 area. But if you wanted it as a trade, yes. But I would not think of it as like a long-term buy. Okay. Next thing that I had is EXLS. So I remember doing this some time ago. And at the time, I remember saying, we've got a peak E. This is Excel Services Holdings, Data Analytics, Insurance, Healthcare, Banking, Media, Retail, Financial Services. And I said, wow, up until now, it's just been in the perfect field. But it was starting to roll over. So the 152-ish high that was made back in early Feb, it went all the way down to 3 days ago, down to 39. Now that is a big percentage move. That makes it a sell mode in the daily. Look, this is the first week that 9-period moving average, since it crossed positive back in July or so of last year, back in the 30 area, going all the way to the 52. This is the first time that the 9-period moving average has flipped negative. So I would say just be real careful, because it's now in the area that's kind of in the bullseye of this particular market. Not so much the healthcare, but it's certainly media, because that has to do with, that has to do with sales. But the retail part of it, I just say be careful. So yeah, the 200 period moving average is just above where it is right now. It could have a bit of a bounce, but it's really not a very pretty chart at all. It has to have a V-shaped pattern going to the 46s by, I'd say, the first week of April, and that'll be very impressive. But until then, I'd be a little hesitant. Next question came in about where do we go? Could I look at, hi, Basil. While I still see Nike breaking the 10-year lows and reaching the 30s, do you see ripe conditions for a $6 to $10 bounce here? So that's a good question because, wow, Nike is right in the, I'm talking about a bullseye. It is in the bullseye of everything. I mean, China, I'm sure it gets a lot of its products from China. Sport and sportswear people will be cutting back on that stuff. And I know, Dan, you've been looking at this since it was way up, and we were looking at it back in the 140s, I think. And you said, I have a target in the, if I remember correctly, you said 75, but it went to 82, and then it had a big bounce, and now it's broken down. It's at 53. I don't see anything for Nike. So yeah, $5 to $10. No, that was yesterday. It had the opportunity, and then it made a lower low. I just don't see it yet. I might see it tomorrow, but I don't see it right now. Another question came in. Could I look at? Where was it? Oh, yeah. So this is what I want you to do. I've got. Someone said, "Can you look at some of those IBD stocks?" Yeah, I will. But you know what? I promised someone that I would look at the Mag 7 type stocks. So look, here's Microsoft. So we've taken, we got in at 338. We took nice profits all the way up, and then I said, you know, we're just doing nothing, and I think it's going to arch over and come down. I should be shorting. But we've got it as a long. I don't mind having two positions, one long if it's from way lower down, and then using the other as trading. I just never did it, even though I spoke about it, even though it deflected lower right there. The 9-period moving average did not cross positive. If we have all the signs of saying, yep, why don't you short? Well, it had 171 round number high on the day that it made the 371 high, the day it made the 344.79 low. So we've got out of a chunk of that position. I still have something at the 338 because that's low down. Look, 337 is the 200-period exponential moving average. I would not be surprised if it gets there, but this one could have a bit of a bounce. It's bouncing today at 5.61 at 360.16, but there is such resistance between 367 and 372. You would have to get a major market turnaround that is signaling a 10 trading day rally. I just don't see that right at this time. So yes, it's acting well, but I do have this target of going back to that entry price of 338. On the way, I would like to see a decent bounce to see if we can get out a little bit more. I don't know as a long-term position now. I think the highs are 468.35.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019. finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So this question came in, what about the UCO, which is the, this is for crude. UCO is the, wait, did I type in the wrong place? I think I did. Yeah, I typed it into the den. No, I'll type it into the UCO right there. UCO is, there we go. UCO is $18.07, $17. Yeah, I think in terms of looking at just chart patterns, let's just go to the crude oil itself, because this is the United States. This is, they call it the ProShares Ultra Bloomberg. This is the long position. And you can see it looks the same. And that made another peak D. It's interesting. And it took out, remember, I speak about this inside track repellent zone. We've made a lower low. Now we are, look, isn't this like the semiconductor chart? I think I spoke about this the other day. Let me just show you the chart that I was looking at to compare it with SMH. Oh, what was it the other day? We were looking at it. I said the weekly chart looks like the monthly chart, therefore should be going down there. So this is the chart that we were looking at. The weekly chart looked very much like the monthly chart of the crude oil. Right there it is. Lowercase h goes to lowercase m. And if it takes out the left side low, in this case, in the continuous contract, that's the May 2023 low of 53.09. And what's the low today is 55.12. We're almost there. That's just not a very good sign at all. So I'm not sure if you just wanted me to look at it or if you have a position, but what I am going to say regardless is that the arch formation, if it takes out, this is a monthly chart, I don't care, on a weekly basis, if it takes out and closes on a weekly basis below the 53.09, this is a continuous contract, so it's the low, whatever the price is, because it gets smoothed out, whatever the price is of the May low of 2023, closes under it. That is telling us something a lot more serious. That actually, now you can start talking, because oil very often is indicative of a do I say the word? Well, I'll say the word. Recession. Okay, when oil is just fading like this, I mean, are we really looking at a kind of a stagflation here, where it's impossible to raise prices, and yet the commodities are acting in such a way that it's impacting pricing? Well, I think this could be the case with crude oil. So I just say, if you look at the SCO, and funny enough, I had this on my buy list about 2-3 sessions ago. And I thought, guys, there's so much going on. I can't go there for subscribers. I've got to focus on other things. But that would have been I don't think I would have got it, because if I recall, it was a gap up day, and I usually don't. We did it yesterday, but I usually don't buy gap ups unless I think there's a continuation pattern. So this is telling me that the price of crude oil could keep going down. But I'll tell you what, the level of 30.02, which is 6 point. I mean, it's a long way off. That was a high back in May of 2023, but it was actually the 3 months before, which was in March of 2023, where we got that major low in the market. That was at 32.42. So you have some upside targets if the oil's going to continue down. But more importantly, if you look at jets, and JetBlue, Tommy was talking about JetBlue. I have to tell you, I would hate if JetBlue folded, although they're not as comfy. They used to have the comfiest seats and everything. They haven't been like that for a couple of years now. So JetBlue Jets, the U.S. Global Jets ETF, look at this little cluster formation here. It's not garnishing any kind of momentum to the upside, and the stochastics at 11%. This is not a good chart. It looks to me like the U.S. Global Jets ETF, if it takes out the low of 3 days ago, which was at 17.11, I cannot rule out going all the way back to the May of 2024 low of 16.48. Let's just go one step at a time, saying, please get some strength to get to at least tag 19 over the next 3-4 days, because that's what's needed kind of to save the day. Next, a question came in. There's quite a divergence in the Dow and the NASDAQ, or as Basil would say, a bifurcation. Yeah, we're seeing that a lot right now. Look, the Dow is up 45, but the S&P is up 25. I mean, that's quite a big difference. And if you look at this, let me just show you this real quickly. Look, Dow, daily chart, having a bit of a green candle, up 82 at 37,738. Look at the S&P, SPX.X, slightly different pattern, right? S&P is trading, typed it in the wrong place, SPX.X. It has a slightly different pattern in that the weekly chart is pointing to 4,744 as a major magnet. If it goes even just one, let's see, 4835.84 was the low, 04 was the low 3 days ago. If this goes about 10 points lower to the 4829, I'd have to say 48. If it cracks 4800, that 4744 becomes really starts to become a magnet. And look at this trend line. It just held this major long-term trend line in the S&P. So there are differences in what's happening. QQQ, very different pattern. Look at this. QQQ is more like the S&P in the sense that it wants to go to the 391 level in the 200-period moving average in the weekly, but it's really working very hard right now to break away from the low that was made just over 400. So the monthly chart is very different in the QQQ to the S&P and even the Dow. So I see a big divergence there. IWM, poor old IWM is down 1.38 to 173.46. Look at that. That is in a sell mode in a monthly chart for the iShares of the Russell 2000. Gosh, the TZA, let's see where that's gone. TZA has gone, TZA just even now has gone from the 200-period moving average support back in the 14s, end of March, to 25.02. So yeah, this is, wow, there's been a lot of damage done. Now I need to look at. So this is interesting. You know, this is where I'm really missing so much. I'm missing Tom O'Brien, late Tom O'Brien. In down moves in the market, and I watched him. I mean, I've watched him and listened to him since the 1990s, I think it was, and I joined here in 2002. Started my newsletter in 2003. So I've seen him through all different kinds but I noticed that he was absolutely at his best in markets like this, where the market, he got his signal and he would push and push and push to the downside, and he wouldn't let go. I'd say, I remember he would. It was amazing to watch. It was a gift that was given to him to be able to, and that's why he was able to get into all these different fields. He got into the market. Remember, he got the gold report. Then he eventually had gold as something that TFNN used to buy and sell. And then he got into real estate. That's what made him. He just had that instinct, that gift. We miss him all. And with that, we're going to go to a break. Dow's down 117.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks, we're back. So I had a question about Chinese Internet ETF KWEB, KWEB. If it's trading at 28.41, if it takes out the 27, if it closes under 27 the next day or two, that low that was made back on the right there, back on the 23rd of January of 29.02, and now we're under that. That just says to me you got to be real careful, because in the weekly chart I'd be looking at the low of there it is, the low of January, was it also? Yeah, January the 10th, the week of the 10th, 27.27. That gets taken out. I think the 25s will be hit very quickly. So the other thing is, anything that you're doing long right now, you just got to treat it as a trade, a very quick trade. I mean, even that Amazon we were talking about, look at this, Amazon is starting to fail. It's 171. What was it? 173 or something. You got to be real careful. Treat these as anything on the upside. The tide has changed, so until the tide really starts to turn, you've got to be very careful on the long side. And you can treat them as trades, and if it turns out that your stop isn't hit and still keeps going higher, just raise the stop or take something off, like I was mentioning to Jacob yesterday, on anything that you have, and it gives you a sudden very good gain. Take something off, reward yourself, and then raise the stop. And if you get taken out, you get taken out. That's just the way it is at this particular time. So with that said, I think I've covered almost all the questions that I've got just in front of me. I'll probably close down and then say, there were 3 or 4 more. So 70 countries might be coming to D.C. to negotiate. China is one. That's all you need. You get China, you've got them all. And that's going to be the bugbear. So I would treat these as just a little bit of noise, but mostly I want to see if China's going to come in. It's going to take a while for them to do that. I'm going to wrap up. Give you to Steve Rhodes. Check out Open Call Daily Newsletter, and I will see you tomorrow. Thank you for being here, and have a great day.